So good morning, good afternoon, depending where you are located. Thank you for joining us. We are pleased to welcome you to this webinar, which is organized in collaboration with the Prince Accounting for Sustainability project, A4S. My name is Brigitte Raffegeot. I am the lead on the network content at the IRC. During this webinar, we will explore how investor relations teams can engage on the driver of sustainable value with the A4S Essential Guide on enhancing investor engagement and a case study. This guide is one of the 7 guides published by the Prince Accounting for Sustainability project, A4S, Chief Financial Officer Leadership Network, to help the finance and accounting community address the practical issues of integrating sustainability into their business processes and decisions. These guides are designed to inspire the financial community to action by providing practical guidance, knowledge, and case studies. Each guide is supported by case studies from network members, which demonstrate practical application of the approach and techniques set out in the guides. Currently, there are 7 guides available: Managing Future Uncertainty, Finance Culture, Natural and Social Capital Accounting, Social and Human Capital Accounting, Strategic Planning, Budgeting and Forecasting, CapEx, and Enhancing Investor Engagement. I will introduce this webinar and lead the Q&A session, which will take place during the last quarter of this webinar. To discuss about how investor relations team can engage on the drivers of sustainable value, we have today the pleasure to have 2 speakers who will share with us their insights, their ideas, and the lesson learned, and will exchange with you on this topic. Our first speaker is Helen Slinger, Executive Director at A4S. Helen will present an overview of the A4S practical guidance developed to assist companies as they seek to engage investors on their individual business models for creating long-term value. Our second speaker, David Huizing, is David Huizing, Vice President Investor Relations at Royal DSM. Royal DSM is a global science-based company in nutrition, health, and sustainable living, which is listed on Euronext Amsterdam. Dave will present a case study on how they are engaging with the investor on sustainability. Next, please. The 2 presentations will be followed by a Q&A session. I would like to emphasize that it's an interactive discussion. On the right-hand side of your screen, you will find a box that you could use to ask a question or make a comment during the presentation. You can either share your comment or question with everyone or send it only to the organizers. We also encourage you to discuss with our speakers during the last quarter of this webinar. To be able to hear correctly our speakers, we are asking you please to put your computer or your phone on mute. This webinar is recorded. The recording will be made available to the IR Business Network and also to the A4S network. After this webinar, we will send you a quick survey. Please complete it to let us know your thought and enable us keeping improving our webinars. Without further ado, I shall give the floor to Helen Slinger, Executive Director at A4S. Next slide.
Thank you, Brigitte. And good morning, good afternoon, wherever you are, everyone who's joined. I guess, first of all, I just wanted to give a very quick intro on A4S and give you a little bit of background on who we are. I'm conscious some of you may not have heard of us. We were set up by His Royal Highness, the Prince of Wales, back in 2004. In recognition of the fact that the accounting and finance community weren't generally equipped with the knowledge and skills and tools that are needed really to account for sustainable business. And if we are going to achieve a sustainable economy at some point, then that's something that he felt needed to be addressed. We work across the accounting and finance community, and our aim is to make sustainable business as usual. In fact, one of the first areas that we focused on as an organisation was the need to communicate the financial relevance of social and environmental issues and to communicate those more effectively as part of mainstream financial reporting. And it was that work that led to the foundation of the IRC back in 2010. So we're very glad to still be working so closely with the IRC, and I'm really pleased to be able to share some of our work with you within this webinar as members of the IR Business Network. Next slide, please, Maria. So the Essential Guide to Enhancing Investor Engagement, what's it all about? So we developed the guide because we wanted to produce some practical guidance for investor relations teams to engage on the drivers of sustainable value. It's the result of a series of interviews and some wider discussions with many parties across the investment chain. So that included companies, asset owners, asset managers, some sell-side analysts and corporate brokers. We then brought all this together into this guide so that it's much more practical and accessible to help investor relations teams as they seek to ensure that the investment case is constructed and communicated well. Next slide, please, Maria. So why engage investors on sustainability? Well, firstly, because sustainability matters. There is a growing body of evidence which suggests there's a correlation between sustainability practices and corporate performance. So those companies that have strong sustainability practices tend to also be those that have good corporate performance. And that's possibly to do with the fact that management are much more attuned to outside influences and to megatrends, the changing environment around them, and the impact, the opportunities and risks that brings to the organisation. Secondly, investors who do take sustainability issues seriously tend to be those that invest for the long term. So by integrating sustainability into business decisions, we may therefore increase the long-term orientation of your shareholder base. The statistics you see on the screen are taken from a survey undertaken by Accenture, UN Global Compact and the UN Principles for Responsible Investment. And I believe there were over 100 investors and over 1,000 corporate CEOs interviewed as part of that. And they found that although 88% of investors saw sustainability as a route to competitive advantage, companies were not communicating this effectively. So you can see with what we presented here, when asked whether their companies were setting out their strategy for seizing the opportunities presented by sustainability, 57% of CFOs felt that they were, but only 8% of investors agreed. So there's quite a difference there, something of a difference in perspective. And when CEOs were asked whether they could quantify the business value of their sustainability initiatives, 38% that they could, and only 7% of their investors agreed. So you can see there's quite a gap between how companies and investors view a strategic response to sustainability and the effectiveness of how this is communicated. I mean, if a company is to create value for shareholders, for customers, employees and society in both short and long term, then it really needs to attract investors who have confidence in their business model so that they're willing to provide the capital needed for it to achieve their aims. Next slide, please, Maria. So perceived barriers. Now I'm going to put this right out there because I know if I don't, I know it'll come up in the Q&A session at the end. But there's often the perception that investors aren't interested. And we have a few examples here on the screen. And yes, during our interviews, we did hear this. You know, we did hear my investors never ask me about sustainability. When I talk about it, our corporate responsibility activities, the investors' heads go down, the phones come out, but you know, they're not engaging. But I think you will agree, hopefully, that investors are interested in returns. They are interested in sustained performance. They are interested in competitive advantage. And they're interested in how management mitigate risks that threaten these important aspects. So increasingly, investors are making the connection between these things that are important to them and sustainability and how that creates a sustainable business. So often it's not about what you tell them, it's about how you tell them and how you articulate why it's important to them as investors. So it's about explaining why sustainability is commercially relevant. It's about integrating this relevance throughout the investment case, linking it to the strategy, linking it to commercial outcomes, and giving them a convincing explanation of how it all fits together. Now, interestingly, yesterday we launched our debt finance guide, and that provides guidance to treasurers on integrating ESG into their treasury activities. But one of the conversations that arose as part of the workshops that we held for that launch is how only a year ago investors weren't asking too much about sustainability, but how now that's becoming more rare. It is increasingly the norm for investors to ask. Next slide, please, Maria. So the guide itself, so it's split into 3 key sections. Prerequisites, which looks at what needs to be in place first. So before the baton is passed over to the investor relations team, if you like, before you can be in a position to convincingly talk to your investors about sustainability. So there's a section on that. Then there's a section on overarching principles. So this takes you through 7 principles to keep front of mind when you're interacting and communicating with your investors. And finally, there's a section on how to apply these principles, giving practical guidance on how to apply those principles in a number of key areas. So we'll touch on each of these in turn. Next slide, please, Maria. So prerequisites. So as I've just mentioned, this is about what needs to be in place before you can convince your investors that sustainability matters to your organisation. There's a number of areas that can provide a clear signal in terms of how serious you are about sustainability, and some clear giveaways if it's not a core part of how you run the business. Now, this part is largely about what your colleagues do. So what your colleagues in sustainability, in finance, in risk, strategy, or HR, what they do to truly embed sustainability within the operations of the organisation, within the DNA, if you like. But what investor relations teams need to do is to really understand that. So you leave your colleagues to do all the hard work, if you like, but you need to get a good understanding of what that all means, what that means to your organisation. So, for example, if we were to pick up the sustainable business model as the prerequisite in the chart there, you know, this would be about understanding how the different capitals, so natural, social, human and financial capital, for example, underpin your business model and how that might change over time. And analysing the impacts and the dependencies of each of those capitals and the different links between those capitals and how they are encapsulated within the business model of the organisation. And that can help to really demonstrate how sustainability issues are relevant. So like I say, just as an example there for sustainable business models, but each of those different sections is picking up and helping you to understand what your colleagues should be doing to help give you the right messages to communicate to your investors. Next slide, please, Maria. So the overarching principles, so this is the second section. Once all those fundamentals are in place, once your colleagues have done all their bit, you can then look to develop the narrative for investors and begin to share it with them. The overall principles set out in the guide will help to ensure that the way you do this is effective, and it gives you some practical tips towards doing that. So linked to strategy. This is around building the communications around the long-term corporate strategy. So it focuses the conversation on the issues that are fundamental to the business's ongoing performance. For example, this might be including content in the investor roadshow presentations that focus on that strategy and explain how the company responds to the risks and opportunities that are presented by global megatrends, such as climate change, resource scarcity, aging population, etc. The context, provide context. So what it's saying here is about looking to understand and to quantify and explain external drivers. So the business's impact and dependencies relating to the global megatrends and how you go about quantifying them. So the financial implications of climate change would be an example of that, or the dependency of the business on material types of natural capital, you know, perhaps bees for pollination, and the value at risk for these natural capital services no longer be available. So really trying to articulate to the investors how the megatrends can be quantified and how they might impact the business. There's the piece around having a long-term focus. So creating a better balance between the short-term and longer-term factors in your communications with investors, in particular in your reporting, and reducing the emphasis on quarterly performance where possible. There's adopt a commercial tone. So communicating the relevance of sustainability to the bottom line, and some examples of that we've already just touched on. So talking to investors about the profitability, the market opportunity of products, maybe that have specific sustainability credentials as compared to the mainstream, and what the market opportunity might be for them. We've got integrate. So embedding sustainability into all investor communications, articulating that relevance throughout. What we often see is that the separate section at the end that talks to sustainability or to CSR But this is about truly making sure that it's integrated throughout those communications. Is be consistent. So yes, you've set out that long-term strategy, but really sticking to it and making sure that your reporting is consistent year on year, so that common thread can be followed through by investors and they can see how you're progressing over time much more clearly. And to use standards. So what we heard in interviews was that there is a lack of comparable standardized performance information out there across companies, and that was repeatedly cited as a barrier by investors. This continues to be the case. So wherever possible, try and use standards that are widely recognized, such as SASB, and to make those sector relevant where possible. So next slide, please, Maria. The third section is around applying the principles. So to help you think about how to apply the principles across all the activities that you as investor relations teams are undertaking. So it picks on these five key areas. So people, digital, presentation and reports, investor relations strategy and operations, and quarterly updates and analyst calls. And it provides recommendations or suggestions for what investor relations teams can do, split between those that are quick and easy and those that take a little more time, a little more planning, and need to be worked towards. Next slide, please, Maria. So the guide leaves us with 10 top tips. We've already touched on several of these in the presentation so far. So we see on there, embed sustainability into how you do business. Make your communications long-term focused. Be consistent. These are some of the key messages that the guide is really trying to get across. Next slide, please, Maria. So that's everything that I wanted to say to introduce the guide. I understand there are questions later, but I just wanted to draw your attention to a couple of other relevant publications that we've had out recently that link back to link back to capital markets and give that broader picture. So Financing Our Future, released last year, it sets out actions to deliver a global sustainable financial system, and it gives recommendations for all parts of the investment chain. So the asset owners, asset managers, companies, etc. And the A4S Essential Guide to Debt Finance. Now, Brigitte, you listed earlier the other guides that we have available. You possibly weren't aware this was launched yesterday. So it is hot off the press, brand new on our website. And it's guidance for your colleagues over in Treasury on embedding environmental, social and governance considerations into their activities. So that can sit quite closely along this guide, and the two are hopefully quite useful for an organisation to use together. Next slide, please. So I think that's everything that I wanted to share with you. Our contact details are here, where to find us on social media and our website, and how to contact us directly. I look forward to questions at the end, and I will hand back to Brigitte to introduce our next speaker.
Thank you very much, Helen, for this great presentation of the guide. And so now we have 8 great guides to read on your website. Now we'll have David Huizing, Vice President Investor Relations at Royal DSM. The floor is yours, David.
Thank you very much, Brigitte. Good afternoon, everybody. Thank you for listening in. Building upon what Helen just said, what I'm going to tell you, at least trying to tell you, is basically DSM lived through the development of sustainable investing and the way you see it developing. And the reason is we started pretty early. We started more than 10 years ago. The good news is that we're seeing today that investors are increasingly getting not only interested, but even feel the urge and the need to start to basically make their investments far more sustainable. So what I'm going to try as messages to give to you through this webinar is 3 things. Our experience is that your sustainability drive has to be an integral part of your strategy. So it's not something isolated, also something Helen just said. Second of all is you have to make it part of your culture. So it's not something like you do on top of things you normally do. but it has to become really part of your whole company culture. That takes you quite a while to implement that. And it's really a long-term journey. So there are no quick fixes, there are no simple things to implement it. It's a lot of hard work. And actually over time, what you're seeing, it's even getting more difficult when you look at today versus 10 years ago. So Maria, can you go to the first slide? First, next slide, please. Very short about the company Royal DSM. We started as a coal mining company. We transformed ourselves into a petrochemicals company. We transformed thereafter into a fine chemicals company. And today we are a specialty nutrition company with specialty materials. So our history is one of constant transformation, adapting basically to a changing environment. And in 2007, we decided that sustainability would become the heart of our strategy. Next slide, please, Maria. So today's portfolio, just to give you an idea, we are the biggest player in the world of nutritional ingredients, so the healthy stuff, which goes for half into animal nutrition, the other half goes into human nutrition, and we also have a small activity in specialty materials, 10 billion sales per year, with 70% in nutrition, very much innovation driven, true global company with 25,000 employees. Next, Maria. So I just told you that we embarked on a sustainability journey more than 10 years ago. And the reason was actually the following. We said, if you are in nutritional ingredients, actually what is really key in nutritional ingredients is basically that it drives sustainability. So sustainability should not just be something you do as a company by, okay, saving on paper, saving on electricity, but can you also make sustainability a key business driver? And that's actually what we did. So we decided in our strategy in 2007 to make sustainability a key business driver. That means we want to be in those businesses where sustainability is the key growth driver. Now, 10 years ago, that was a big dispute with investors, because investors said, yeah, okay, it's very interesting. So apparently you guys want to improve the world, but yeah, that will be going to the detriment on profit. So there was a big debate about, okay, what are you doing? Are you now focusing on profit, or are you improving the world? Now, 10 years later, today, what you're seeing more and more through academic studies, but also through the perception nowadays of investors, they're seeing that basically doing well financially, like DSM, we're doing quite well financially, it can go together with driving sustainability, or as some people call it, doing well for the world. We think that in 10 years from now, being a sustainable company, or with a fancy word nowadays, being purpose-driven, will no longer be a nice to have or an add-on. It simply will be a requisite. So people, in order to basically have a license to operate, you have to have a decent purpose and you have to be sustainable. Next, Maria. So if you look at our strategy, I just said key for us is that sustainability is in the heart of our strategy. So this is the strategy slide as we present it also to our investors. The top basically says our purpose is to create value for all stakeholders. It's not just the shareholders, it's equally same for employees, for our customers, our suppliers, but also for society at large. So quite simple, as our CEO always calls it, you cannot prosper as a company in a world that fails. Hence, as a company, you have a responsibility also for the well-being of society, and therefore a company has to take that into account. Having said that, we also turn it around by saying, and sustainability also offers us great growth opportunities. So if you go to the left side of this graph, basically what we're saying is that we can drive growth simply based upon the combination of looking at our competence. So we are a science-based company active in nutrition and health and sustainable living. We look at opportunities being able to address global megatrends. Think about malnutrition, think about urbanization, think about food scarcity, all these elements. We can make an impact, we can make a business element to it. And on top of that, we're looking at, okay, And do these activities also make an impact on the United Nations Sustainable Development Goals? Now, if you take these elements together, then basically our strategy is that we want to focus ourselves in 3 domains. One is nutrition and health, the other one is climate and energy, and the third one is resources and circularity. What should that bring, that strategy? That should bring us more engagement with society at large, our suppliers, our customers, our employees, and also our investors. Our activities should be more sustainable, but it should also bring us more growth. So you can go to the next one, Maria. It means we have 2 targets. So if you look at our strategy, I just explained that sustainability is at the heart of our strategy. Of course, you have financial targets. We have 2 simple targets. One is high single-digit percentage EBITDA growth, and one is a cash flow target. But if you go to the next slide, Maria, next to our financial targets, we also have non-financial targets, which for us are as important as the financial targets. Think about greenhouse gas emissions. We want to have a 30% reduction by 2030. Energy efficiency improvement, we're looking at purchased recyclable electricity. We were at 21% in 2017. We were in 2018 already above 30. We want to be above 75% by 2030. Other criteria, we're looking at employee engagement. That's very important for us. We are in the high quartile with 75%. We like to maintain that. But also safety is an important element. If you go to the next one, Maria. What we did, of course, I showed you we have from our strategy financial targets, we have non-financial targets. If you look at the remuneration of our managing board members, 50% of their remuneration is based upon financial targets. The other 50%, whether it's short-term or long-term, is based upon sustainability targets. And that's not only for the managing board members, it goes throughout the whole company. So basically we have a bonus system in the company that runs until the lowest level, and everybody has this scheme. 50% is sustainability based. And that is what I mentioned earlier as a culture component. If you want sustainability, if you want your whole organization to think about, how can we make our operations more sustainable? You have to do it basically throughout the whole organization. You simply cannot run that from the top. Next one, Maria. What is also important, it's very nice that you are sustainable, at least that you think you're sustainable, and you try to convince your investors that you're sustainable. But investors need also benchmarks. Investors need a simple kind of a metric like, okay, how do I benchmark companies on their ESG performance? And there the rating agencies are very, very important. So as a company, it's very important that you are well recognized by influential rating agencies. Examples you see here, for instance, MSCI, but also Sustainalytics. Having a very high rating, first of all, you have to earn it. It means it's a lot of work of basically getting these earnings. But the advantage is, of course, that for investors, they can relatively make a simple screening. On top of that, of course, then they can put their own standards. So nobody 100% is 100% relying upon one of those benchmarks. But the benchmarks are very important. Next one, Maria. What you're seeing is that where ESG has been a theme that has been developed over time, and I will show you in a second how it has developed, at least for us. The second thing is that investors more and more not only want a lower risk profile through good ESG performance of a company, but they increasingly also want a company to make a positive impact on the United Nations Sustainable Development Goals. So basically they themselves through their investments want to make a positive impact, and they want to understand through their investments how they're making this positive impact. Next one, please. I will give you a few examples where, okay, that's good. Stay there, yeah. I will give you a few examples of what we mean with we focus our strategy, our growth on sustainability developments. Few examples here. What you're seeing here is we are in the fish feed business. So we supply nutritional ingredients for fish feed. Now, what is the issue with farmed salmon? 70% of all the salmon produced is farmed salmon. The only issue is farmed salmon needs to be fed with small fish. So basically you need 3 kilograms of small fish to produce 1 kilogram of salmon. The reason is they need omega-3. So basically it looks more sustainable than it is. And so what we have developed, what we're marketing, is a product which is an algae-based omega-3 that enables our customers in the aquaculture business to eliminate fish, let's say wild fish, to grow farmed salmon. Next one, please. Another example is a product which we gave the fancy name Clean Cow. When you look, let's say, at greenhouse gas emissions, and you look at COP21 and the Paris Agreement, you look, let's say, at all the things we're trying to achieve, a lot of people don't realize that livestock has a very high greenhouse gas emission quote. If you look a little closer to it, it's even worse. And the reason is methane is a far more potent greenhouse gas than CO2. So if you correct for that element, then what you're seeing is that cattle alone produces more greenhouse gas emissions than all transportation together on Earth. Now, what you're seeing is that everybody tries to tackle transportation, everybody focuses on transportation, but not on cattle. Now, what we have developed is a feed ingredient that reduces the methane emission with cattle. Basically, when you look at it, if we would apply that on a global scale, basically we have already exceeded the COP21 targets. Next one, please. Another one, if you look at, we're in the health space, so we make nutritional ingredients. One of the biggest problems we have with food, the big mega trends which we have to address, is people eat too much fat, too much sugar, too much salt. So all these three things, we're looking at how can you replace these products with an alternative without the consumer having to give in on his preference for sweet products. Now, most people know that sugar consumption is basically a big, serious health issue at this moment. Some even say that sugar is the next tobacco. There is an interesting alternative out there in nature, and that's called the stevia plant. So leaves from stevia have sweet molecules. The only problem, of course, is that if you want to replace sugar on any big scale, basically Earth is not big enough to grow all these stevia plants. So what we did is we isolated that molecule from the leaves and then developed a process to produce them through a fermentation route. That way we can make a sweetener which has 0 calories, which is natural. So it's not an artificial product like, for instance, the artificial sweeteners, and it can replace sugar. Next one, please. And that's the last one I will show you. We have also developed a technology for making recyclable carpets. Now that sounds like, okay, what on earth, why would that be important? Well, at this moment, carpets are not recyclable. And the reason being is carpets consist of multiple materials, of which some of the materials simply cannot be recycled. So what we've done is we developed a product, a technology, which consists of a mono material, which is 100% recyclable. And also in the production, basically you save a lot of energy. Actually, we can save up to 90% of energy usage to produce these carpets. Next one. I'm going back now to why is it relevant to pay attention to sustainability. So why is it relevant? And I think I will probably, it's not a surprise when I say that at ESG, performance of a company has become important for almost all investors. So all investors to a certain extent paying attention to it. You see here on this slide some key drivers being mentioned. What we're seeing is that investors have become less tolerant of corporate ESG incidents. They also start understanding better what the potential benefit is. They're willing basically to act where companies fall short of essential ESG performances. And what you're also seeing is that with, and I mentioned it earlier, through the rating agencies, we start having better understanding about standards, how you can measure ESG, hence you can compare companies, so it becomes more transparent. Next, please. What you're seeing over time is that the whole thing evolves. So we started, let's say 10 years ago with, okay, ESG is a kind of a qualifier. If you meet a kind of a basic ESG standard, that's fine enough for investors, and then we focus on profit. And also ESG funds in itself were still in their infancy at that period. Now, 5 years ago, we've seen that ESG has become more mature, but we've also seen that most asset managers focus especially on the G, on the governance part. Now, when you look at today you see that ESG more or less becomes integrated in the analysis of a company. So it's now all three components, but still you have a discussion where you say you have a focus on the profit, and ESG you basically see as a risk mitigation. So it's a little bit like the profit opportunity versus risk management. What you see appearing now is small impact funds, where people say, okay, and we simply look at the sustainability development goals, and we look at, through our investments, can we also make a good societal impact? What we think is that in 5 years from now, that first of all, people will further integrate the ESG, but also increasingly want to make a positive societal impact, and hence make big funds out of these activities. And second of all, is demand from companies more disclosures as to their impact on the so-called SDGs. Next slide, please. One last word about what we are doing, because where the ESG has become more mature over time, we have a good understanding on how you measure ESG. For instance, DSM now has also so-called reasonable assurance. It means that our reporting on ESG is being audited by our auditor in our annual report. But of course, the next leg in this whole discussion, and that's a key dilemma for us, is of course, how are you going to measure the impact on the Sustainable Development Goals? Why is that a big issue? First of all, every investor has its own methodology. There is no commonality at this moment. So the next thing is, how do you link it to investment? And the third discussion is also a little bit, sometimes you see that the positive societal impact can have a negative ecological impact. I give you an example about our stevia. Some people say, okay, we should go from the sugar of today to stevia. Yeah, plant-based stevia. That's very nice, but and it has a positive sustainability development goal impact, but it has a very negative impact for, let's say, society, because it takes too much water, too much land to make it sustainable. Now, what we're doing as DSM is actively participating in all kinds of working groups which involve investors on trying again to get a kind of a standardization on these SDG measurements. We have developed our own system, which we call Brighter Living Solutions. So basically, we measure the impact our products have on the environment and also on the societal impact versus their mainstream competitors. If that's better, then they get a positive score. But what you're seeing is that methodology, again, is different from the impact sometimes measured by investors. So the big question we have, of course, is how deep do you have to go with investors to basically prove this impact, and how can we make this real? That's actually my story. So with that, I hand it back to Brigitte.
Thank you very much, Dave, for this very instructive case study. So we'll go to the question now. Next slide, please. So if you're shy, you can write via the chat function. I will start with the first question actually for Elaine. So you spoke about prerequisites in the guidance, and how would you encourage, how in practice I can encourage my colleague to get started on the prerequisite?
Okay, that's a great question. I think you're right, it is about encouraging them. So I think it is about going to have conversations within the organization and trying to find who is doing what in relation to sustainability. So if you don't have a sustainability team, then maybe look for, is there an environment team? But either way, it is a case of going around, seeing who is doing what, and how you can get an understanding of what they're doing. Now, how you can encourage them, I think there's a whole raft of information out there for business, for how they should be, how business needs to engage with sustainability. You only have to look at things like climate change and the potential impacts of that. You only have to look at things like the SDGs. You only have to watch the news and listen to podcasts to get a sense of, I think, of urgency that there is now around how we are not operating as a sustainable society. So people, I think, conceptually understand this. I think what people don't necessarily understand is how that links to business. So it's really trying to help make those connections for them, help them to understand what the link might be to profitability, what the link might be to risk, what the link is in terms of reputation, in terms of delivering on the purpose of the organisation, and really trying to link it all back to the business, what it's there to do, and the people that work in it, the customers, your wider stakeholders.
Thank you, Elaine. I have a second question. This time is for Dave. In the process of implementing sustainable practice, did DSM have to make a choice to sacrifice short-term profit? And how did you present to investors the long-term benefit of this new strategy?
Yeah, that's indeed a very good question, because that was also a real question. I mean, actually, until not too many years ago, that was almost a daily question in your engagement with investors. Because the notion is there from investors that sustainability must cost money and should not have a benefit. In reality, that's not really true, unless you are extremely short-term focused. So indeed, if you run your company only for quarterly results, you don't invest in your company. So basically, you're harvesting your company. You can say any penny you put into sustainability is hurting an investor. If your notion is that the company is there to remain, and the company basically can manage a business at least with a horizon of a couple of years, but it should actually also manage the business with a much longer horizon, then what you're seeing is that the investments you make in sustainability already have a payback, simply because if you reduce water usage, electricity usage, etc., you also reduce cost. So there is a cost reduction element in it. So that's one thing. That's often what at least investors understand. They also see that as a risk mitigation. Today, of course, what they also see is that pricing on carbon is a big risk. And therefore, if companies are better suited to deal with that, that at least is a lower risk for them. But the second element, they also see over time. If you can convince your investors that by investing in sustainability trends, you make products which are more favorable for, let's say, the consumers, and the consumers are increasingly paying attention to, is this a green product? Is this a responsible product? They're willing to pay more money for it. So basically what you're seeing is you see it back in both your margins as well as in your growth rate. So what seemed like a big dilemma, short-term, let's say, results versus investment in sustainability, has been proven over time not to be true.
Thank you. A second one for you, Dave. What is the biggest challenge you face in dealing with sustainability investors?
The biggest challenge you're facing, our biggest challenge is that investors are used to basically valuation models. And there is an outcome out of the valuation model. So now they know how to put the financial parameters in, but how do you put the non-financial parameters in? And what kind of horizon do you have to take? So the struggle is a little bit, you have to bring back everything to a figure, but how reliable is that figure? I think that's the biggest debate we have with investors. They get it, and I think also Helen mentioned it earlier, they get it, it should be beneficial. The notion that basically it doesn't really have a negative impact, it's there. But now how do I basically value it? I think that's the biggest struggle we see.
Thank you. We'll go back to the guidance, A4S guidance. Elaine, there's a lot of useful information that you presented and in the guide, but how do I start with it?
Okay, so I've mentioned about going to talk to your colleagues, and I do think that's an important part. But I think the other key stakeholder here is obviously investors. So talk to your investors, understand what it is they want to see. Many have some public information available on that. So definitely those conversations are really important. But also look at what others in your sector are doing. Look at the kind of information that they are presenting. Look at their investor information they have on their websites and beyond, and work out where you can position yourself in that. So there's part of it is around what the company is doing, obviously, and do you feel like you match up to that? And if not, again, it's those conversations internally. But if you do and you're just perhaps not communicating that well, then learn from your investors and what they tell you they want to see, and learn from what your competitors are doing and what perhaps they're doing better than you.
Thank you. And actually, back to Dave, what has been the response from your investor when you start, changing and have been overtly resisted?
Yeah, also a very good question. What you have to do is explain, explain, explain. I mean, what you cannot do is simply think, okay, I ignore the investor world, I stubbornly will go my route. So when we embarked on sustainability, the advantage we had is our CEO is a biologist. So he really had this notion like things are going wrong and we have a responsibility. Then it takes a lot of effort, yeah, and also you have to go to your customers and you have to tell them the story. I think what I see a lot happening is that people want to do sustainability things, but have the notion or idea that investors don't like it. So yeah, let's do it a little bit in the background. We tell the stories all around the world, but not to investors. And I think that is what we've learned is you have to go to investors, you have to explain it to them. So it also becomes transparent. This is what we're doing. So if you invest in us, this is what it is. We promise you that we think we drive an above organic growth, therefore also an above profit growth. But at least we are transparent in what we're doing. I think that's key.
Thank you. And a question for you too, actually. What if my investor really aren't showing any interest at all? Is it worth the effort?
If they're not interested at all, well, in all reality, we have a lot of investors, shareholders in DSM who are not interested. They simply are interested in the financial part. They invest also in DSM. But the nice thing, of course, is they know what we're doing. Yeah. So they cannot criticize us for doing these things. So they know exactly what they're investing in. But yes, you're right. If today I would make a rating, what I typically see is that the longer term investors are interested in sustainability. More and more they also really incorporate it. The more shorter term investors are not interested in it. But what you're seeing over time is that your shareholder base becomes far more a long-term focused shareholder base with loyalty. So we've seen basically that if you look at the ratio of short-term versus long-term in this whole process, the vast majority of what we have are long-term investors who are very, very loyal.
I'd echo that actually, and I think part of what the guide is trying to do as well is to help investor relations teams to help get some of those messages across. So if they're not initially interested, then they will be over time. And like you say, they won't all be now, but increasingly they are so, and we only see that trend moving in one direction. So you're perhaps having these conversations with them, but also are other companies they're invested in. So I think the sort of the business case, the investment case starts to stack up a lot more.
Thank you. Maybe a last question for Dave, unless you have we have another one. What are the key benefits you have seen from this approach?
The key benefit of this approach is now there are a few key benefits. I think one of the key benefits we're seeing is that we basically classically we're a chemical company, and when you nowadays look at the war for talent around the world, of attracting the right young people, the talented young people, then what you're seeing is people don't want to work just for a company for money. They want to work for a company with a purpose they can basically align themselves with, which they like. So what we're seeing is that we have become very attractive for employees, and employees are coming to us. So that helps us a lot. We see the same thing on the customer base. I mean, just as an anecdote, I mean, we see that some of other customers ask if they can use our name in their promotion materials because they buy green materials for DSM in their plastics. So also for our customers, there is more to the story for them than just I'm buying a material from the company DSM. It's also we aligned with the company DSM. So basically, yeah, using a little bit also of our green image for themselves. Those are just two examples where you're saying, okay, how does this work for us and what does it benefit?
Thank you very much to both of you. Would you like to add something to your question, to the answer of the question or to your presentation? Helen or Dave?
No, maybe the only thing I want to add is just I think for especially for companies, but yeah, it's worthwhile investing in this route. I think this is something which is worthwhile exploring. You don't have to expect quick, let's say, results. This is what I said, mainly a culture change thing. So it requires you a lot of commitment throughout the whole organization of driving it. But I'm very much convinced that this is where investors want to go, and investors are increasingly under pressure to basically also prove to their clients how their money is not just made through whatever activity, but has a positive impact also on society.
We actually have another question. In prerequisite, what does remuneration mean to the company? And if the business doesn't have those prerequisites, which one do you recommend to start developing?
Okay, so take the. Sorry, I thought that was for me.
Please go ahead.
To take the first bit of the question first. What does remuneration mean? I think it's largely about the way that Dave explained it, and the way that they've got the right incentives in place within their remuneration model, both at the board level and throughout the organisation. So the example that Dave had, you recall, it was 50% financial and 50% based on sustainability metrics for those who were receiving bonuses. So it's those sorts of considerations, making sure that the sustainability performance is linked to remuneration. So that's the kind of thing that it's referring to. So the second part of your question, I think about if you don't have those prerequisites, where do you start? I think the right place to start for an organisation is at the strategic level. Now, as an individual within that organisation, that's not something you can solve on your own. But I think it's more about actually helping those who make those decisions to understand some of those things. Now, we're actually doing a project at the moment at A4S, which is exactly around that. It's around engaging the board and executive management on sustainability. So we recognise that is a challenge in a number of organisations. So people who are within organisations that don't necessarily have the power to change those things, how can we actually equip them with the right information they need to help to get to those decision makers and sort of try and change the way the company thinks about things.
Thank you very much. Dave, do you want to add something?
No, I fully agree with Helen. At the end of the day, still in this world, money talks. So by making it financial for everybody, people will pay attention. Also, otherwise you have a weird thing. If you say, okay, sustainability is very important to us, but at the end of the day, the only thing that counts for your income is our financial performance. Then people will only pay attention to financial performance.
Thank you very much to both of you. So thank you very much to Helen Slinger, Executive Director at A4S, and to Huizing, Vice President Investor Relations at Royal DSM, for this instructive and practical element to start well on enhancing engagement with investor. Thank you very much to all of you, and hopefully you will want to go to other webinars that we're going to do in the coming months. Thank you very much.
Thank you all. Have a good evening.